With over 23 years of experience in the stock market, I'm Anthony Calhoun. Welcome to Simplified Profits, where we like to keep compounding profits in a very simple manner. And we made some changes today in our transparent account. We freed up some cash flow, uh, averaged down in a position, and the market had a pretty interesting day. Wasn't nothing too crazy. I know a lot of people probably thought it was. And let's take a real quick look. We'll go over the market real quick and then go over the transparent account. So SMH, it was probably the biggest decliner for the day. So it closed down 1.97%. Um, I mean, it's been running like crazy though, so nothing really huge. And it bounced off the 20-day moving average where it seemed to just kind of pull back up. You can look at the 15-minute chart there, hourly chart there. So obviously the hourly charts, 15-minute charts, they get oversold. They swing like the rest of the time frames, but the stochastics on that is still 69, basically 70. So it's not oversold yet. It's nothing we're looking to enter. I'm wanting oversold territory on all my swing trades like you see here. So if we take a look, triple Qs, now that is the closest out of the big four that we're going to go through here as far as being oversold. It is at 55. It's crossed under the 20-day. I'm hoping to see this touch the bottom Bollinger Band right around here and be oversold. Now, the thing is, our transparent account, we kind of used up our cash flow to average down on a position. We'll go over that here in a minute because I'm hoping that we're not down too much on it. If we get a swing up tomorrow, we may cash out of that and jump into one of these positions as far as a leveraged ETF. SPY, so it closed down about a 0.5% today. As you can see, all of them kind of bounced up at the end of the day. So they bottomed out right around 12 to 1 o'clock and then kind of worked their way back up the end of the day. So it's still over the 20-day moving average. Stochastics are still 75. So, ladies and gentlemen, we can still have a good little drop here. I mean, we're on the market's been strong, but man, is it really that strong? That I don't know. We're right by all-time highs. Nobody really knows if we're going to keep dropping or go higher. I just know my strategy and how to make it work for me. So Dow Jones, it barely dropped anything. Of course, this was the laggard last year, only up 10% for the year, where everything else was up 20 to 70%. So stochastic moving average is actually heading up as far as like the longer term, but it's kind of just creating a little triangle there in its own little world over the last couple of days, and really no telling. I'd like to see it get oversold, maybe pull back to 370 area. It'd be a good time to enter UDOW or something up there. Let's jump right quick into the portfolio. So I'll pull up the transactions and I'll pull up the positions on our E-Trade account, our transparent account. And if you don't know anything about that, that's the account we started at the beginning of this year with $2,000. We've been adding 20% of our income and compounding profits to see how quickly we can grow that, all based on the principles and simplified profits to book. So IBM is one of our long-term positions. We entered it back here. I think, which is kind of crazy. We entered it there and we're down today. So, I mean, we're not down much. I think we're down about 1%. But we'll take a look at that on the actual E-Trade account and show you the average. But this is really almost a favorite stock for me right now. And don't get me wrong, I got multiple favorites, but as far as one in our transparent account that I've hung on to, I mean, the price to book is low. I mean, it's not really low. It's not one like I'd like to see it, but the PE is low. And it's really a great company. It pays a great dividend. I think it'll really be a good hold. Definitely preferred to enter down here in these swing trades and held it, but we didn't. We entered after the gap up on earnings, after it pulled back a little bit. Now, URA, this is our trading position, which we've been managing. So we entered this. We'll take a look at our first entry. But I want to say we entered this, man, it might have been, that's when it first got oversold. It might have been the day before, honestly. but we'll take a look here in a second when we pull up the positions with exact dates, exact buy-in prices. But this is really the only thing that came up in our oversold bullish ETFs that were worth anything. Now, my hope in this position was that we would have a swing trade up 10 to 13% maybe as this swung down or prior to it swinging down. So we were trying to put some money to work while we waited for the market to pull back. Now, the market hasn't pulled back yet. Triple Q's is looking like it's going to be the closest to hit oversold, at least the soonest. None of them may hit oversold. They all may rally up tomorrow. Don't know, but we'll find out. But this was a bullish chart, oversold. Uranium. I checked the news today. Nothing's really changed. Even in the news today, there were India, a bunch of other countries pumping billions of dollars into nuclear energy. So my outlook hasn't changed any. Technically, it hasn't crossed under the 200-day moving average. We sold DIV today at a profit. Wasn't much, but I wouldn't sell at a loss regardless. So we locked in profit on that. And after watching and kind of digging into a book, I think every trader and investor and anybody who invests in the stock market, 401k or anything should read is called The Problem of 12. Check that out. I believe I posted some stuff on the channel about it. Definitely on StockTwits. But dig into that. I almost don't want to own ETFs anymore, besides for swing trades. I think I'm going to pick all my companies because otherwise you're just giving voting rights to these basically 6 companies that are running everything. They're basically running our country with voting rights in these companies based on SPY and other ETFs that people just dumping their money in. I know my little bit will not have any effect, but I'm going to do what I can and hopefully educate people on how to pick good stocks, how to be a little bit more of an active investor and probably outperform the market. Like Peter Lynch says, you do have an advantage, especially when you throw the stock charts in there. So URA, this is our trading position. I hope it don't break down and go lower. This thing could drop another 5% tomorrow. We could see it touch the 200-day moving average. Just because I bought more don't mean it's at its low. Obviously, that's why we keep cash flow. And we are really out of that. So I'm going to be, we have cash flow hitting the account roughly, I think it'll be about $700 this Friday. As I said, we put 20% of our income to work. So that would give us a little bit more money to work with. And if this trade, let's go to it real quick. Bear with. All right. So these are our positions. So this is URA. The first time we bought that looks like was on the 14th. Okay, and then the 16th, and then today. So these are basically all of our buys. Our average is 28.59, basically 28.60, and we are down roughly 2%. Now this is making up 78% of our portfolio right now. So man, it would be great if we could lock in a 10% run on this, but I don't know. I don't know if I'm going to hold out for that or if this bounces 2-3%, lock in small gains and jump over into the triple Qs leverage ETF or the semiconductor leverage ETF or Quad X, which is the 4 leverage version of SPY. So I'm not really sure how I'm going to trade this. Obviously, I'm going to manage it until we're up and in profit. And we may run the whole trade out on this, honestly. We're basically all the way in anyway. I'm hoping to see it turn around tomorrow, but it might not. And if not, we'll continue to try to keep our average as low as possible and lock in profit when it does turn around. That's how you manage a position when the position goes wrong, okay? What I expected and planned on happening did not happen, okay? I planned on entering maybe once or twice, it running up before a pullback even started in SPY, locking in profit, rolling that profit in that position over into some leveraged ETFs. That didn't happen. So we got to manage this position, lock in profit. And I'll show you the transactions we actually got out of, or trades. We actually got out of DIV today at a very small gain. It was like $1, which wasn't really much capital tied up in that. It was like $600, 13% of the portfolio. But you got to keep your cash flow and your averages down. If DIV was actually down 0.1%, I wouldn't even sold it. Okay. I hate losses that much. There's one loss on our account right now, and it eats me up every time I look at it. And that is GD, just because we got out before earnings. If we would have held through earnings, we would have had a really good run up. I just thought that run was going to happen prior to earnings. It didn't, but I didn't want to risk it at earnings. Anyway, let's take a look real quick at the trades. But this is where our transparent account stands. We're in two positions, 80% in URA, down about 1.8%. And that will change tomorrow. We'll either be up, we'll be down more. Tomorrow will be interesting. Like I said, I don't know if I'm going to hold the whole swing trade out on this, or once we get up, if the SPY, Dow Jones, semiconductor ETF, if those are oversold, I may jump out of this, flip over into one of those, just because I do like those. Maybe we'll only sell partial position. I don't know. We'll see what happens when the time comes. Like I said, IBM, I really like it. I'm going to probably hold that for a little bit. Not down. I mean, we're down 1%. We entered that on the 9th, 185.40. I think this stock's going to run for years to come. I could be wrong, and if the stock chart changes on me, goes under the 200-day or starts looking bearish, then we'll get out of that position. But for now, let's take a look at the trades just so you can see the DIV sell. Not really a big gain, but I don't want to see losses. If that was $1 loss, I wouldn't have took it, because that's how much I hate losses. Okay. Once you get in the habit of taking $1 loss here, $1 loss there, instead of managing that position, and we bought DIV multiple times to be up, even just that amount. So manage your positions and the profit. Okay. Don't get in the habit of locking in. Your profit is going to compound and look great over the long term. Okay. Your losses are going to compound and look very, very ugly. If you get in the habit of just locking those in because you want to change positions, wait until you're up, manage that position till you're up, and then lock in your profit and move to another position if you want. All right. That's it, ladies and gentlemen. Subscribe, leave some feedback. Let me know what you'd like to see. I'm out.